Hello and a warm welcome to this very important video. Today, we're talking about a topic that affects millions of pensioners in Germany, and it's fantastic news. The new 2026 pension reform brings significant tax benefits, and today I'm going to explain exactly how you can get up to €2,000 tax-free. Be sure to stick around until the end because I will guide you step by step through all the important details. And by the end, you'll know exactly what you need to do to benefit from this reform. Before we dive in, I do like to ask you to subscribe to this channel and activate the bell so you don't miss any important updates on pensions and tax topics. Every like helps this video reach more people who can benefit from this information. So let's get started. The 2026 pension reform is one of the most significant changes to the German pension system in recent years. Many pensioners have worked hard and paid taxes for decades, and now, finally, some much-needed relief is on the way. But what exactly does this reform mean, and who can benefit from it? These are the questions we'll answer today. First, we need to understand how the system has worked until now. In Germany, pensions are taxed according to the so-called deferred taxation principle. This means that during your working years, contributions to the pension insurance were partially tax-free, but in return, the pension payments are taxed later. The taxable portion of the pension has been steadily increasing since 2005. Someone who retired in 2005 had to pay tax on 50% of their pension. This percentage has risen every year, and for pensioners retiring from 2040 onwards, the entire pension will be 100% taxable. That doesn't sound particularly great, does it? But here comes the good news. With the 2026 pension reform, there are significant improvements to the basic tax-free allowance and deductible expenses. The basic tax-free allowance is the amount that every taxpayer in Germany can earn without having to pay taxes on it. This amount is regularly adjusted to compensate for inflation and rising living costs. For the year 2026, the basic tax-free allowance will be significantly increased. While it was around €10,908 in 2024, it is expected to rise to over €11,500 in 2026. That's a considerable improvement right there. But that's not all. In addition to this basic allowance, there are other ways to save taxes that many pensioners were either unaware of or haven't fully utilized. One of the most important changes concerns the income-related expenses and special expenses that pensioners can claim. Many pensioners don't realize they can still deduct various expenses from their taxes even in retirement. These include, for example, costs for tax advice, bank account fees, membership fees for unions or professional associations, and much more. By cleverly combining these deductible items with the increased basic allowance, pensioners can actually save up to €2,000 or even more in taxes. Let's walk through a concrete example. Imagine you are a retired couple, and each of you receives a monthly pension of €1,200. That's a total of €2,400 a month, or €28,800 a year. At first glance, you might think you have to pay taxes on a large portion of this sum. But watch what happens when we apply the new regulations. First, each of you is entitled to the basic tax-free allowance. As a married couple, this doubles to over €23,000. Then come the income-related expenses. Even if you don't have any extraordinary expenses, you can claim the standard deduction for income-related expenses of €102 per person. That's €204 for both of you together. Next are the special expenses. Here, there's a standard deduction of €36 per person, so €72 for the couple. But it gets even better. If one of you pays health insurance contributions, these can also be deducted. The same goes for long-term care insurance contributions. These can quickly add up to several €1,000s a year. Let's assume your health and long-term care insurance contributions amount to €4,000 a year combined. All these amounts are subtracted from your taxable income. Now, let's do the math. You have a gross income of €28,800. From this, you subtract the basic allowance for both of you of €23,000, the income-related expenses of €204, the special expenses deduction of €72, and the health and long-term care insurance contributions of €4,000. When we add all that up, you can see that your taxable income is suddenly much lower, or in many cases, completely eliminated. This is, of course, a simplified example, but it shows you the principle. Depending on your individual situation and which expenses you can claim, the savings can be substantial. In many cases, by skillfully using all available allowances and deductible costs, pensioners can indeed save €2,000 or more in taxes. But now you're probably wondering, how do you do this in practice? How do you ensure you actually take advantage of all these benefits? The first step is to file your tax return. I know many pensioners think they don't have to file a tax return if they only receive their pension. But that's a big misconception. Even if you are not required to file a tax return, it can be worthwhile to file a voluntary one, because only then can you claim all the deductible expenses and potentially get money back from the tax office. There are several ways to do your tax return. You can do it yourself with tax software, or you can get professional help from a tax advisor or a tax assistance association. Especially if you're unsure or have more complex financial circumstances, professional help can be very valuable. And don't forget, you can deduct the costs for this advice as income-related expenses in the following year. Another important point is receipts. You should carefully collect and keep all receipts for your expenses. This includes invoices for tax advice, bank statements showing your account fees, membership fee receipts, certificates for health and long-term care insurance contributions, and anything else that might be relevant. The tax office can request these receipts, and without the corresponding proof, your claims may not be recognized. Now, there are other aspects of the 2026 pension reform worth mentioning. One important change concerns the treatment of additional income. Many pensioners still work part-time or have small side jobs in retirement. Until now, there were strict limits, and anyone who earned too much faced reductions in their pension. The reform brings more flexibility here. The additional income limits will be significantly raised, meaning you can earn more without your pension being cut. This is particularly important for people who work not just for financial reasons, but also because they want a meaningful activity or want to continue contributing their expertise. Society benefits from experienced professionals remaining active longer, and the pensioners themselves have more financial freedom and a better quality of life. Furthermore, there are improvements in the recognition of child-rearing periods. Parents who have raised children receive pension points for these times. The reform provides for this credit to be even more generous, especially for parents who had children before 1992. For many affected individuals, this could mean their pension will be higher than previously calculated. Another aspect is the improvements to disability pensions. People who can no longer work or can only work to a limited extent for health reasons receive a disability pension. This is often significantly lower than the regular retirement pension. The reform provides for the extension of crediting periods. This means that when calculating the disability pension, it is treated as if the person had paid into the pension fund for longer. This increases disability pensions, which is a significant financial relief for those affected. Now, I'd like to touch on some common misunderstandings and mistakes that pensioners make on their tax returns. A big mistake is that many pensioners don't fill out the Anlage R form correctly. The Anlage R is the part of the tax return where pension income is declared. It is crucial here that you make all entries correctly and really declare all pension income, including company pensions or private pension plans. Another mistake is that many pensioners don't claim their extraordinary burdens. These include, for example, medical costs not covered by insurance, costs for medication, aids, or care services. If these costs exceed a certain reasonable personal contribution, they can be deducted from taxes. Especially in old age, when health costs often rise, this can make a significant difference. Household-related services are also often forgotten. If you employ someone to clean for you, help in the garden, or perform other household-related tasks, you can deduct 20% of the costs directly from your tax liability. This also applies to tradespeople's services if you have renovation work done. It's important that these services are performed in your household and that you have an invoice that you paid by bank transfer. Cash payments are not recognized. Another point is donations. If you donate to charitable organizations, you can deduct these amounts as special expenses. This applies not only to large donations, but also to smaller amounts, such as membership fees for charitable clubs or churches. Here too, it's important to have the appropriate receipts. Let's also talk about timing. The pension reform takes effect in 2026, but you can start preparing for it now. Review your financial situation, gather all relevant documents, and consider what expenses you might be able to make before the end of the year to claim them for tax purposes. Some expenses can be timed to fall in the year where they provide the most tax benefit. It's also important that you stay regularly informed about changes. Tax laws can change, and what is valid today may not necessarily be valid in a few years. That's why it's wise to stay informed, for example, through videos like this, through professional literature, or through advice from experts. Finally, I want to summarize the most important points one more time. The 2026 pension reform brings significant tax advantages for pensioners, thanks to the increased basic tax-free allowance and the various deductible costs. Many pensioners can significantly reduce their tax burden, in many cases by €2,000 or more. To benefit from this, you should file a tax return, even if you are not obliged to do so. Carefully collect all receipts for your expenses and do not hesitate to seek professional help if you are unsure. Remember that every financial situation is individual. What is the optimal solution for one pensioner may not necessarily be the same for another. Therefore, it's important that you take a close look at your own situation and, if necessary, seek individual advice. I hope this video has helped you better understand the new 2026 pension reform and see what opportunities you have to save taxes. If you have any questions, feel free to write them in the comments. I'll try to answer as many questions as possible, and maybe your question will be interesting for other viewers too. Don't forget to subscribe to this channel if you haven't already, and activate the bell to not miss any important updates. Give the video a thumbs up if it helped you, and share it with other pensioners who could benefit from this information. The more people who know about it, the better. Thank you for staying with me until the end. I wish you all the best and good luck with your tax return. Remember, it's your right to use all legal means to save taxes. You've worked hard for decades, and now it's time for you to benefit. Until the next video, stay healthy and financially secure.